Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to This Week in Bitcoin. Today is May the 22nd, 2020. Strong hand, long-term thinking. Bitcoin is the next Bitcoin offended by selling. Unconfiscatable. Oh, yeah. Don't you wish you had that Bitcoin from Pizza Day and you never sold it? Okay, we're going to talk about that, dudes. Hello, my elite friends. We got Juan in the house. He's crossing the border into San Diego, apparently. Literally, he's in a car in San Diego. Guy Juan is here, and Gigi is also in the house. They're all returning guests. Remember, if you got questions I got answers, you can type questions in there. I will try to get them to answer your questions. They'll ask each other questions too. Well, it's going to be a big round table of fun. So there was lots of news. This is the This Week in Bitcoin show. So we got to go over what was in the news this week. And my, oh my, it was kind of like a flashback, but kind of not. It's like I've lived through. It's like Groundhog Day. Today's Pizza Day, but it's kind of like Groundhog Day. Big news the other day that the Satoshi's coins, they said. All of a sudden, they said some old coins moved, so it must have been Satoshi. All of a sudden, everybody's panicking. Everybody and their brother is scared. What's going on with this guy, Swan? What was your reaction?
I didn't actually get to see somebody posted a screenshot of the transaction, and if I'm not mistaken, it was just 150 Bitcoin block.
Yes.
Like it was just one Coinbase, if I'm not mistaken. It wasn't like $100 million worth of Bitcoin moved, which I thought was kind of funny that everybody's freaking out just because it was an old block. But everything I've seen is that the Satoshi had actually a particular way of putting the block height in his nonce. And so when he was mining blocks or whatever, you can actually go back and look at the strings of blocks that we assume are Satoshis, and that this was actually just one of the early miners. A bunch of people blamed it on Marty Malmy, and Marty actually responded on Twitter and was like, "Yeah, this was not me." And we had this had already been released at this point, and I'm sure there were. People were claiming it could only be 3 people, Satoshi, Marty, or Hal. And he was like, nah, it was released. We had a bunch of people kind of coming in and out. Like it could have been any of 20 or 30 people. So basically, it doesn't seem to be that there's any real evidence that it's Satoshi, aside from the fact that it's like 3 months in. Like it was like in the first 3 or 4 months of Bitcoin that the block was mined. It was 150 Bitcoin block that got moved. Unless anybody has any information otherwise, that's the only thing that I saw.
So the pattern, I think they call that pattern the Paytoshi pattern or something. And
the Patoshi, yeah.
So it didn't match the pattern.
Yeah.
But it speaks loudly about how the media works in this little corner of the world. It was all over Cointelegraph. It was the biggest story out there. Just anything that has to do with Satoshi, it seems like is this one big soap opera or what? Gigi, what do you think about all this?
Yeah, well, I think people always go nuts if this is a possibility, even just in their minds, even if there's just some I'm not even wanting to say misinformation, because once the news hit, a lot of people just didn't know and couldn't know better what was going on, and people had to really look at the details of the transaction and if it could be true or not. But people like a good story, and how the human brain works. It's very you try to find a pattern in everything, and you would like to believe the best version of the story that there could be, and you don't even have to be a conspiracy theorist to think that maybe Satoshi is still alive and maybe he made a mistake and moved some coins or something or whatever. And people just eat it up, and I just like to sit back and watch the drama, because I think the further you're down the rabbit hole, the less you care about things like these. Because even if hypothetically it would be true, maybe it would crash a bit. It would be more cheap Satoshis for us, and the daily stackers alone would eat this up in no time. Even all of Satoshi's coins, you know. So I
Indeed.
think it wouldn't even be such a big deal if it would indeed be Satoshi, but except to know that he is still alive, or someone who has the keys is still alive. But
Yeah,
Yes.
that'd be pretty cool,
Yeah.
to be honest.
Yeah.
And I totally agree. I can't believe, particularly like in our crew, like how much we kind of joke about it, but then everybody's like posting. Like, I think it's become like this weird norm that like the hardcore Bitcoiners now, like the true Bitcoiners, FOMO when the price drops. Like I get so panicky when the price drops, like, you know, with that 40 or what was it, 50 or 60% drop or something. Like I've never spent so much energy trying to figure out how to buy more Bitcoin when I was fiat broke, or at least I thought.
Go
I found
sell a
some.
kidney, you know, Bitcoin go up to 3,000 again. Go sell
How
a kidney.
quickly can this operation happen?
Yeah,
I only
exactly.
need one. I could buy it back later.
You know, it probably won't take long, and maybe it's already
Yeah, we
happened.
had a great time during that drop.
Bitcoiners are generating FOMO just for the price to crash.
All right, I want to hear from Juan Galt here. If you had, if you noticed this this story this week about the fake, not real. They weren't really his coins, but some people said they were his. I mean, and that's something else I want to point out there.
Yeah, of course. I mean,
The whale alert that told everyone. Usually, whale alert is like an automated thing. It was actually the guy who does the whale alert that like pinned it to his profile and put it out there and said, you know, these could be Satoshi coins. So it seemed like he was going through for the drama also. Juan, what was your take?
yeah, I mean, it was all over Twitter. It's impossible not to see it. I mean, again, I'm with everybody else here. I think it's a non-story, but there's a couple of funny things about it. One of them is there's a few people that I saw asking, looking at the screenshots and being like, "What does Coinbase have to do with it?" Right? It's like, no, it's not Coinbase. It's the Coinbase. It's like a word that it was supposed to be. It was a piece of the technology that then the exchange copied the word, and now all these noobs are confused. They think Coinbase had coins in 2009. No, Coinbase did not exist in 2009. The exchange just copied a technical term, like you would say announce, right? They could have called their exchange the nouns, but no, they went with Coinbase. Thanks, Coinbase, for confusing a bunch of people. So I thought that was kind of funny. And then the other thing was there was an Adam Back tweet where he was obviously saying that, you know, Satoshi probably wouldn't do this, and everybody below it is like, yeah, you would say that, Satoshi, right? And then Calvin Ayre, who's basically the financial backer of Fake Satoshi, of Craig Wright, is like, well, I think, I mean, I talked to Satoshi myself personally, Craig Wright, and he says that, you know, it might have been him, but, you know, it could have been some of the coins of the trial of the whole scam they were trying to run. And then Samson Mao replies below, yeah, but, you know, in that trial, you had addresses from Roger Ver, from Bitstamp, from Coinbase, from, like, basically, like, you just threw all the public addresses you could at it. So anything moves and you can claim that it's Satoshi, right? So it's just a big circle jerk, crypto Twitter circle jerk. And I enjoyed it very much.
Yeah, that's a good way of summing it all up, I think. And you mentioned some big jerkers in there too just now. We won't go over all of them. But hey, one thing that I had forgotten about that came out this week, or maybe it was last week, someone just sends me a DM, a good person, and he says, is Adam Back Satoshi? And I'm just like, no. I mean, I think that's the correct answer, because people spend so much time worrying about who it is, and they come up with these almost conspiracy theories about it. No, it's
they need to know, man.
Yeah.
They need a man.
All right. So let's move on. People said are in the chat reminding us what today is. It's pizza day. A long time ago, the first transaction ever of Bitcoin was made. Someone bought Bitcoin. Someone bought pizza with a lot of Bitcoin. That's worth a lot of money now. Okay. But this is, for me on this day, this is what I think about. I don't need to think about the pizza anymore. I don't eat pizza. I don't drink coffee either. But what I think about on today is that as late as 2016, people were bragging about buying all sorts of things with their Bitcoin. Okay. And let's talk about the $100 call fees that people bought in 2016, because that's what it ended up being. I mean, people over $100 of Bitcoin they spent, what it's worth today, they spent on coffee. So we were just, before we went on air, the guys were talking about Lightning Network. So I'm sure we'll get into that because they make really small transactions with that. But what's your take on Pizza Day today, Juan Galt?
Yeah, well, I mean, I'm excited. I think you know, it was a different time. You know, back then Bitcoin didn't actually have any value, so we were trying to give it value. I mean, I came in definitely a few years later than that, but like people were trying to give it value, and you know, when I was saying we were all trying to make it, you know, expendable, right? Because that would potentially grow the pie, right? We're in a time now when, you know, that it doesn't really make sense to spend it, and it's kind of a different culture, and there's lots of cultural reasons why we wouldn't really do that, or if it did it wouldn't be really a big story. But I mean, it was a ton of Bitcoin. I'm excited. We're gonna have a virtual reality pizza party today. Look up Bitcoin VR on Twitter. Stone Crypt is a guy leading it. We're gonna do it just VR chat. You know, kind of like what Yuri Weimeier is doing. I can never pronounce his name with Reckless VR. So you know, we're gonna celebrate it. I think it's a happy moment in Bitcoin history, despite how tragically funny it is. And you know, if all of us, I think there's a lot of us that would probably be rich if we hadn't spent any, but maybe Bitcoin wouldn't be worth as much if we hadn't spent it, you know? So I think we can be grateful for that.
All right, good approach there. Pound that like button, everybody, for Juan Galt. All right, Gigi, your thoughts on Pizza Day?
Yeah, well, I think it's a very interesting day if you're a Bitcoin historian, pretty much. And like it was the first transaction for a real good, like a real physical thing. I think Bitcoin even had a price before that, like it was traded before that in very, very tiny liquidity, of course. But yeah, as Juan was saying, people were trying to figure out what a Bitcoin is worth and what you can do with it. And I think we're still in that phase, you know, like most people are still trying to figure out what a Bitcoin is worth. And of course, there's a group of Bitcoiners that will tell you it's worth so much to them that you just can't have any, like you can't have any of my Bitcoin. But the ironic thing is also that, you know, I still use Bitcoin daily pretty much, and I also spend it almost daily, especially with Lightning. You know, like if something is like 1 cent, I'll just just today I got a guy's Bitcoin holiday calendar because I was trying to do that for a very long time. You know, like it's one item on my to-do list. That's just endless. And of course, I will spend some Bitcoin if it's the only thing that the seller will take. And there are more and more people that are like that. You know, like just last week I bought some stickers for with Lightning and sold my Bitcoin for that. I exchanged my Bitcoin for that. And I know I will regret all this in the future, but I also don't care because it's part of the progress. And it's actually, I think it's interesting that even Laszlo talks about it, and he talked about it a bunch, and he doesn't really regret it. First of all, he was very, very early in the space. He obviously still has Bitcoin. He was one of the first GPU miners, as far as I know, and so I don't think he cares about the 10,000 Bitcoin or however much it was that much. I'm pretty sure he still is around, and I'm pretty sure he still has some Bitcoin. And I hope that we will all think about the Bitcoins we spent in the same way. You know, like a couple million Satoshis. Who cares? I spent it back in the day.
Dude, Gigi is serious, man. Before the show, him and Guy Swan, as he said, they were making Lightning transactions as we were waiting for Juan. So these guys are hardcore. Okay, then let's hear from Guy Swan about this.
Yeah, that was actually kind of funny. It's like right before we got on here, he bought my calendar, and then I paid for one of his the 3 cent for was on Bitcoin Dash quotes. I just went from Bitcoin Tina, and it took me to the tweet from early last year. But that's always when fees get high. I love the just going over and sending a bunch of Lightning payments for just no reason whatsoever. Just be like, what fees, man? What are you talking about? I'm on Lightning, baby.
So are you happy about Pizza Day? Do you have thoughts on it?
Yeah. See, Pizza Day is actually one of my favorite holidays. Gigi said, and there has been like speculation, and there was actually one other that I found like kind of in my Bitcoin holiday my calendar research when I went through is I actually found, even though Laszlo's is so famous as being the literal first public transaction that assigned a value, like a price to Bitcoin, there is actually one that happened on the forums like 2 weeks earlier. But it was just, it didn't catch the attention, and it was just kind of obscure on the forums. And it was somebody paid, I'm not going to remember the specifics, but it was literally somebody paid like a couple of dollars for some specific amount of Bitcoin, some obviously ridiculously high amount of Bitcoin. But it really is, though, like I think those are some of the most important transactions that ever happened in Bitcoin, because it was the first time someone attempted, it was the beginning of price discovery. It was the very beginning of finding out that, okay, this system worked. Okay, we actually had a scarce system. Like, we have a scarce thing that you can buy. What is that worth? And it was still this huge experiment at the time, like nobody really knew. It was, but it's like, that was proof, that was skin in the game of, this thing does work. This thing is working. And like, particularly if I was Laszlo, and I know he feels this way because like there's been so many interviews and stuff with him on this, is that like, I would never regret being that transaction, like I was the first one that found value and used Bitcoin for a money. Like, that's the first, real public example of that. And that's amazing to be that early and that important of a first, like, bootstrapping step. Like, just like Satoshi said, is like, even if just for collectibles, it doesn't really matter why Bitcoins adopt a value, actually become valuable. It's just that after it does attain value for whatever reason, that then it can work. Then it can move money. Then you can move money to anywhere, anybody in the world without third parties. And they did that. That was the reason. Pizza was the reason.
Now, I got a question for you. Something that you briefly mentioned and that Gigi mentioned. Tell us about this calendar of yours.
Oh, yeah. I just some time ago, and I've got a couple of little minor corrections actually to make to it. One, to add in the fact that there was a transaction shortly before Laszlo's that was public. But I basically just went through Bitcoin history trying to find all the major holidays. And they're all just posted like publicly. Like, you don't have to pay for the calendar. The calendar is just a shortcut, so you don't have to copy and paste all that crap. Because it took a long time to actually write it all up. But it's on thecryptoeconomy.com. And if you want to see, like tomorrow is actually New York Disagreement Day. The day that everybody, the New York agreement was signed, and all the users were like, absolutely not, what the hell? Like, there was outrage about, a bunch of companies saying, we're going to change Bitcoin and there's nothing you can do about it. And I find that another great holiday, particularly for something that I thought was crazy eventful at the time. But yeah, it's just a collection of all the major events and moments in Bitcoin's history.
That's a good idea. Good. You're in motion, baby. That making stuff like that up. That's a good product right there. All right. So let's we'll talk about Lightning Network in a second. Your Lightning Network news, and we'll talk about Gigi's latest article too, people. So pound that like button. But I'll start out. We got to talk about what happened with BlockFi. BlockFi, they got hacked, but it was information got stolen from them. I don't know. Who here is familiar with that on the panel, wants to speak about that, if anyone?
I mean,
Yeah,
I heard about it.
with it a little bit. Everyone, it seems.
Juan Galt, you spoke up there.
Yeah, I'll give you my thoughts on this, and I think I'll have to jet right after that. So I'll give you a special rant for this one. I mean, I haven't really looked at the particulars of the case or the hack, but what I heard is obviously some KYC documents got hacked. Yep. Some person working for BlockFi got their SIM card hijacked probably, and then this hacker gained access to the system, and then they got a bunch of KYC, a bunch of like selfies of people, like probably all of us have done at some point, just with the ID card, like a total pleb. right? Trying to get our Bitcoin stack some sats. And yeah, that got hacked, right? And it really shows how dangerous this KYC standard is in the digital age. You know, the KYC standard was developed in the banking industry when there was no internet. There was barely telephone, right? Like everything was stacked in papers. You couldn't really hack a bank's KYC. You have to break into the bank and lug, boxes of paper to do anything useful, right? But we're still using ancient security authentication protocols in the digital age. So it's completely ridiculous. It's terribly unsafe, and it leads to identity theft, which is way more devastating than somebody hacking your Bitcoin. Somebody stealing your identity. They can open loans on your behalf. They can take credit. They can take mortgages. They can ruin your life. And this is the main reason that we need to be concerned with sort of non-biometric authentication to our services and the sort of financial services out there. But also there's a really funny sort of flip side to this, and it's that if you get your KYC sort of hacked like this, and then you have a kind of plausible deniability. If there's a loan you don't want to pay, how do they know that it wasn't somebody that hacked your identity and opened it on your behalf fraudulently? So I think this is the kind of hacks that are going to collapse the current banking system, and there's, I guess, a silver lining there, but we'll have to build it back up. So hopefully we'll get some nice buildings and some cushy couches.
All right, Juan. So I guess you got a jet, or?
Yeah, I got a jet. But thank you for having me on, everybody. Enjoy the pizza day, and it's a pleasure being with you.
All right, thanks for coming in here today, Juan. All right, well, he brings up a really good point about KYC being a scourge. What's your take on that, Gigi?
Yeah, well, I think the most problematic thing about this leak is that the actual addresses, like the postal addresses of people, were leaked as well. Like, that's quite a security risk. If someone wants to come knocking at your door and get your Bitcoin, they now can. And I think in general, KYC is just a terrible idea. And Bitcoin doesn't need any of it. It's very unnatural for Bitcoin to have KYC. And I think we will continue to see these leaks. And I think we will also continue to see these friction points on and off ramps. And that's also why I think that everything kind of has to and will develop in parallel. And we can't get to a circular Bitcoin economy fast enough, because once you are in the Bitcoin economy, all of that KYC bullshit, sorry about that family-friendly show. All of that KYC nonsense ceases to matter, because Bitcoin doesn't care who you are and where you live and what your postal address is. You just send transactions, and I really like the take of Beautyon in that whole regard, because Bitcoin really is just text, and you're just sending messages, and it's just a protocol. Like, it's just a messaging protocol, and you don't need to do KYC to use like a messenger, like, and I think Bitcoin should be treated in the same way, and the fact that it isn't is kind of hypocritical. Like, on the one hand, people are saying that Bitcoin isn't really money. On the other hand, they treat it in a very special fashion, because they can't wrap their head around the fact that you're just interacting with a messaging protocol. So that's my take on it. If you can avoid KYC, you should. Like, there are decentralized exchanges and there are peer-to-peer ways to acquire Bitcoin. And if you have to use KYC, I would recommend to take your privacy in your own hands and use tools like Samurai to mix your coins. So I think that's just common sense.
Yeah, man, I am no fan of the KYC and all these people, all these traders signing up for so many different exchanges, sending their passport and driver's license all over the freaking world. Dude, it's not going to end too well. But hey, what do you have to say, Guy?
It was perfectly predictable. It's just, it's inevitability. It's a question of when that information gets hacked, not if, in my opinion. And it just shows like, both of them said that how unbelievably dangerous KYC AML policies actually are for the consumer. Like the illusion, at least I hope that the illusion that it's a form of consumer protection is falling away. Because at least for everybody in Bitcoin, I don't think there's anybody who is so naive still. And I could be completely wrong about this, but I would be upset to find that people are so naive as to think that this is somehow protecting them from something, when obviously it's a means of controlling the user, not protecting them. And it doesn't make sense that this is still the way we do business. Like, it is the worst possible OPSEC for everyone on the internet. It's forcing insecurity. It's forcing weaknesses and vulnerabilities into a system that does not need to be that way.
I wouldn't be surprised
that's
if
why I'm excited about
oh, sorry.
I'm excited about all these like Lightning derived and like key side derived authentication stuff, because the only thing that we can do, and maybe it's decentralized platforms like you said, other exchanges like BISC and like sort of things like that, that move the needle potentially, but something's got to change. Like, this can't go on forever. Like, the fallout's going to get worse and worse and worse.
Well, I would hope Bitcoiners don't think that KYC is there to protect them, but there are a lot of different types of Bitcoiners out there. There's some that think the government is here to protect them from a virus. So I wouldn't be surprised if some still think KYC is there to protect them. Now, you mentioned Lightning Network, so I want to hear your Lightning Network thoughts. We were talking about it on air some, so give the people what they want to hear. They want to hear some innovative Lightning Network stuff that's out there.
All right, so I've been playing with every time fees get high, I start playing with Lightning again. Partly just for fun, just to kind of self brag. But there's been a lot of interesting developments lately that I've been trying to take advantage of, and one that I haven't really gotten to play with yet is multi-loop. But probably in the last 3 weeks, I guess, there's been like 5 or 6 really big updates. So multipath payments have come to Lightning, and I'll give you a little brief lesson here for anybody who really doesn't have a visual grasp of what Lightning is. So rather than sending a normal transaction where I would send a Bitcoin to Adam here, what I do is I open up a 1 Bitcoin channel with Adam. And what that means is like, think about it like when you like have a little foosball game and you have little points over on the side and you can slide them to your side or the other side. That's basically like a channel. And that's what we do is we make payments back and forth and we slide Bitcoin from his ownership to my ownership. But because he has other connections in it, we can do this in like through like the phone game. Like we can do it through a chain. But the key part is that we have these channels. I want to open up multiple ones into the network. But that means that I have individual channels that I'm limited for spending. And a multipath payment is something that has been in the works for a long time, where you can use all of your different channels at once as if it's a single balance, which is critical. You don't want, it's weird to, like, if you have money on Lightning or money on Bitcoin, like, it needs to be one balance. You don't want to be like, oh, you have $500 on Lightning, but you can send up to $100 payment. It's like, why? That doesn't make, that feels odd. And that has finally released very recently, and multi-loop is the ability to basically refill or empty all of your channels at once, at one time. Again, it's the move from Lightning being this kind of weird user experience that, you have to know what you're doing, you have to know what you're looking at, to you have one balance and you can send payments. And the client on the back end is doing all of the confusing, it's obscuring away or hiding away all of the complexity in the background. And I think that's a huge development because it just makes it so much more capable, I guess you could say. The ability of better functionality and a better user experience is a major step, in my opinion. And then at the same time, we're seeing the security of it mature. And they just raised the default limit for the client for how big a channel can be, so every channel comes with a certain amount of risk. You got to have good backups. You have to be able to watch the network. So they kept it really small to begin with, so you couldn't move a lot of capital. And I think that's why exchanges and other services haven't really adopted it a lot, because there's really small limits. There's basically the protocol itself is saying, be careful, this is getting risky. And the fact that they just upgraded that they just said, okay, now we can put, $500 or $1,000 as default in the channel. It's saying that this is getting more secure, that this is maturing. It's no longer as reckless as it has been to participate in this thing. And that's a really exciting thing to see the people, the developers or whatever, who are all about adversarial thinking and spend their days and nights trying to figure out how to break this thing and then refix it, that they are growing in confidence. That's cool. I think this is another major step. But then there's like LSAT. There's update to the RTL interface. There's Sphinx chat that I've been playing with, which is awesome. You're using Lightning to send encrypted messages back and forth. I've been playing that with Paul, and been trying to sneak invites for people since it's still beta. But I love this little thing. It's awesome.
What exactly is the LSAT?
LSAT is how the internet HTTP protocol had a 402 payment not found, this old error code that never found a use. Been sitting there for 25 odd years, whatever it is. Well, it finally has a use. LSAT is a web-based Lightning authentication. It combines like your normal macaroon, your a proof of payment on Lightning, and then what's the other one? I guess it would be like the URL or something like that. I can't remember exactly the technical back end, but essentially it's a way to it's a proof of payment that allows you to authenticate who you are and what you have access to without usernames and passwords, without having to sign up for some subscription. It's sort of like paywall, except that instead of just paying for access to the link, you're paying for activation of a token that, and not like a altcoin token, not like a garbage thing like that, but like an authentication token, like everything that you do online when you're logging in, and that gives you access to the thing. So it would be your Lightning public key and your token that is actually allowing you to move around and do things, have access to certain things behind paywalls, so that if you move browsers and you're not logged in anymore, you don't suddenly lose access to your article. It's based on the fact that you've paid for a token, sort of thing. But it's hard to explain without a bunch of examples of the value of this, but essentially it's a native integration of Lightning payments and your public key as an identity into the web. And it just cuts so much of the unnecessary steps out of the entire process and really cleans it up and helps solve this whole KYC AML problem. By not having that, your identity isn't attached to it. It is your authentication and your proof of payment that is your authentication on the web, not who you are, not your username, not your personal information. So it's a subtle thing, but I think it's another really, really big improvement.
Beautiful. Gigi, any thoughts on this Lightning stuff? You were playing around with it before the show started.
Yeah, a couple. Like to piggyback on LSAT also, there are a bunch of narratives from the early days. Andreas Antonopoulos popularized some of them, like streaming money and paid APIs. And LSAT is one step in that direction. Like you can actually think about doing stuff like that with such a mechanism. And as Guy said, you can use it basically for two things: one for authentication, but also for actually paying for services on an internet level, like really integrated in at the protocol level. And you can think of it as as a reverse proxy for the HTTP 402 error. Like you can put services behind it that you actually have to pay to access, and there's no other way around it. So I think it's really, really interesting from a technical perspective. And one thing I wanted to point out, because it's Pizza Day and we're talking about Lightning, I know this because of Guy's calendar, of course, so another shout out to that. But there's also the Lightning Pizza Day, because Laszlo, who we mentioned before, who bought the actual pizzas, he was the one who again bought 2 pizzas on the Lightning Network, and it was one of the earliest real world transactions using Lightning as well. So again, as I said, he's still sticking around and doing awesome stuff, and that was on February the 18th. So
it was on February. I was just looking it up. I was like, when was Lightning Pizza Day? February 18th, 2018.
That was
So
that guy was a pioneer in spending, definitely, man. Wow.
Yeah, of course. He probably still is. So we have 2 pizza days. So two days to sin, you know.
All right, good. That's a good way of looking at it. Okay, so I want to give you the floor here, Gigi, to tell us about your latest article and to talk about the book too. But tell us about the article.
Yeah. You know, the book is kind of old news for me, because I wrote it like over a year ago now, and it's recent news because Guy actually was able to put it on Audible, so it's now an very, very official audiobook as well, and everyone can get it there. Everyone can still get it for free as well, but if you're so inclined, you can pay for it and get rid of the dirty fiat with Audible. And I wrote a bunch of things after 21 lessons, and I'm still writing. Like, I'm still writing every day, and if it's good enough to be put into an article, I will try to continue to do that. And I was writing actually a series of articles which I called letters for the next era, like for the next epoch. And I was writing for 3 audiences. Once for the legacy people, which like traditional bankers and people that are just not born on the internet and just will never get this, probably, you know, the people that have to die off for hyper-Bitcoinization to happen. And I was writing one for Bitcoiners, which is called Dear Bitcoiners, which was a very optimistic letter to a bunch of known and unknown friends around the globe. And the last one was Dear Friends and Family. And I wrote this one because I still have kind of a double life that I'm living, you know, like I have my Bitcoin life and my regular life. And they're in the process of merging, but it's also kind of really hard because I'm an M and I don't use my real name. And it's also hard because I'm still having a very hard time convincing my friends and family that Bitcoin is an actual real thing. You know, like I'm from a first world country. We have a working banking system. It's still funny internet money to most of them, and nobody really takes it seriously. And I was just putting my thoughts into this letter, what I actually want to tell everyone. You know, like it's an accumulation game, and we are all running out of time. So if you're near and dear to me, please just start stacking some sats. Like, please just believe me and just do it. And I don't have the time to explain it to you, you know, like as Satoshi famously said, like, if you don't believe it or don't get it, I don't have the time to explain it to you. So I wrote this letter, and my plan is that now whenever someone asks me if now is a good time to buy, or what about Bitcoin, or what about this shitcoin, I will just send them this letter. And it's a distillation of what I've learned as well. I try to keep it short. I mention where I think things are going. I mention the most common pitfalls, like people think that Bitcoin is too expensive because you have to buy a whole coin, of course. Bitcoin is old technology, and Bitcoin is too complicated, and it's risky and speculative, and all that, and that Bitcoin will be replaced like it's, you know, the Model T or MySpace or whatever. So everything that a complete newbie that is misguided might think should be in there, and I link to some other things as well. And it's basically just my way of saying, please, 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 do it for yourself. Just start stacking sats, and you might be saved in the future.
All right, so it is linked to below. Dear family, dear friends. People have been retweeting it, talking about it. So there, you got the author describing it. So thank you for that, and keep on writing, keep on doing your thing, being in motion over there. Yeah, so let's talk about what was alluded to beforehand. The mempool, it's filled, it's crowded over there. The fees are getting higher. Guy, your take on it?
I'm excited. I've always, Bitcoin is an adversarial system, right? All right. It's about overcoming anything that could kill it. It's about sustainability. It's about knowing that it will survive for the long term. So when Bitcoin gets stress tested, those I think it's anti-fragile. Like without pressures, it does not properly improve. It does not grow. The worst thing for Bitcoin is that everything goes easily and happily for another decade and it has no stresses, and then suddenly something happens. That would be the worst case scenario. And I think that with right now, particularly with the development and the improvements on Lightning, and the further, I think, building out of that infrastructure, we have been in the honeymoon phase for too long. Like there is a third era of Bitcoin that has to happen. We have to move this over to fees. There needs to be a point where the mempool is literally always full, that we are like persistently 10 blocks behind, whatever it is. Because otherwise there is no security market for Bitcoin when the subsidy ends. And because of that, and particularly since like with fees, the dynamics of Lightning opening and closing channels shift. And one thing that makes me really happy, even though it kind of, in some ways, like I kind of feel bad about it because I'm like, oh, good, more work for the developers, more complication. I kind of feel like I don't want to push that on anybody. But at the same time, all of those conversations have shifted to, okay, so what were our caveats? What were our fallbacks when fees were high? How do we secure this HTLC when fees are more than the payment? Like all sorts of things like that. And it's necessary that we address that. Plus, we're in a place where there's only like we've kind of plateaued at 60% adoption of SegWit addresses. There's still a lot of the network that uses legacy, which is much less efficient. Like if we all updated to SegWit, we could, move our 1.2 megabyte, 1.3 megabyte, 1.5 meter up to, 1.8 megabytes, 2 megabyte blocks. And this is exactly the sort of thing that finally makes pressure for the companies or the services or the users of the wallets that did not upgrade when they're paying a $3 fee when they could have paid a 92-cent fee. It's, it makes sense to finally push finally pull the lever on making that shift. So again, that's pressure for this, and it has to sustain for, weeks on end for people to realize that, okay, it's time to do something about it. So I really just see this as a necessary pressure and something that will just continue to push this thing to get better and figure out what this market is going to look like in the third era, way ahead of actually solving all the problems before, time runs out. Essentially, bite the bullet, fix it now, figure out how it works, and make it robust and sustainable for a century to come.
All right, that's a really great point on the people that haven't gone SegWit yet. If their fees are getting higher, then this will put some pressure on those dudes to jump on the SegWit train. You said some controversial things there. It's great. That was a good rant. Gigi, your thoughts on the high fees and crowded mempool?
Yeah, well, fees are always in a quantum superposition. Like they're always too high and too low at the same time, and people will moan about them in any case. Like if the fees are too low, you will have a whole bunch of people telling you that Bitcoin will never transition to a fee-based security and it will die because miners will stop mining because the reward is too low and so on. And if they are too high, then people are complaining that they can't buy coffee on the Bitcoin base layer. And so you can never, you can never make it right with Bitcoin fees. It will always be like this, I imagine. And I just want to remind everyone that we have another technology that never scaled, and that is the internet. Now we have 4K streaming video, and you have people complaining sitting in airplanes, and the airplane Wi-Fi can't stream 4K YouTube videos, and the internet is just bad. It was always bad, and it will always it will always be bad. And I think a Bitcoin on the base layer will be exactly the same way. It will never scale, and if it actually works and will continue to work and gain traction and adoption, then it will always have scaling problems. And as Guy said as well, the blocks will always be full because also they will have to be full. And we will solve scaling on higher layers. I'm sure about that, and it's a good problem to have, in my opinion. Like I'm excited as well. It means that people are transacting. It means that Bitcoin is entering a larger audience again, and it's again, this is good for Bitcoin as all things are.
A good quote unquote problem to have when people are actually using it. And sending it around. That's very good. Okay, I want to thank Colonel Swan Jr. sent me $5 in Bitcoin before the show, and he wanted to say happy Bitcoin Pizza Day. Well, happy Bitcoin Pizza Day indeed. Thank you for the sending the Bitcoin and supporting the show. Let's talk about some other news. I think it was from the beginning of the week, but the 365-day moving average for Bitcoin reached an all-time high. Now, I'm not a fiat freak out there, but I thought it was notable that it hit $9,531. And for any year period of time, you can circle. That's the highest average, daily average ever. So, I mean, we've had some peaks and troughs, and now we're steady going up. And the average of the last year is 9,531. And it's never been that, despite that it was, over $19,000 for a day or something.
That's cool. I didn't even know that.
Yeah. That this is the high. So you learn something new on this show every day, people. All right, best guest in the space here. All these dudes. What did you? So what's your initial reaction to that then, guys?
That's awesome. I mean, it goes to show that like if you stop looking at the day-to-day, if you stop looking at these little short-term meaningless charts, then trying to assign every damn 5% move to this, look what happened in this block. Oh, did you hear that China farted? Like whatever the heck it is, like we're constantly trying to overanalyze the noise. Like it's like trying to point at like these giant weather patterns when like one breeze comes across your yard. It's like, look at this cloud over here. Like it's just nonsense. But if you take a step back and you stop looking at all the wicks and all the one big fat candles, and you say, what has this thing been doing? We're growing. Supposed bear market aside, we've just reached an all-time high on the 365-day moving average. That means we have sustainable long-term growth, which has been the argument since the beginning that's what this is designed for. Ignore the day-to-day and you see that.
Yeah, I mean, that was what you just said. Get rid of the noise, people. Long-term thinking. That's what he said, and that's what this is all about. Don't get obsessed every day with what did Satoshi do, and just take a few steps back. Yeah. And when you take a few steps back, you see this. That's one of the statistics you see, that it's an all-time high in terms of the moving average. So sorry to interrupt you there. I thought you were.
No. This best case ever, or best example ever for the case of auto DCA, Swan Bitcoin. Like buying every week, every month. Cash App does it now. Bull Bitcoin in Canada, Amber App in Australia. Like just auto buy over time, slowly, and stack sats. This is a long-term game. And that's a great example of why.
Dude, man, you're dropping some good names. They've all been on the show. The Amber App, of course, and Swan dudes, all sorts. Gigi, any thoughts on the moving average?
Yeah. First of all, it was news to me as well. Like, I don't see charts on my feeds because I'm not interested in trading. And I stopped looking at price in general like 2 years ago. So the only moving average I care about is the amount of sets moving in average to me. and
My balance
but
moving
I exactly. And in general I agree with everything that Guy said and what he said previously about the phases that Bitcoin is in, and that we will have a next one. I really like the view also of the new stock to flow model that Plan B put out, the stock to flow cross asset model. And I really like the way of thinking that Bitcoin went through a couple of phase transitions already, and we're now entering what he calls phase 5. And I think this is just another indicator that it's probably about to happen, because it happened before that Bitcoin will just settle on one price point, which is like 10x higher at least than the previous one. And then it will go sideways for a while. And, people are now freaking out because it dropped to like 9K or something, which is insane. The price point at this level, I think it was like 7,800 or so in this phase. And what that tells me is that probably, as before, and as we like to say in the space, it will happen gradually and then suddenly. I think Bitcoin will kind of steadily keep climbing, and once it really hits maybe new all-time highs, or is at a certain point where people are paying attention again. And who knows who is paying attention this time? Like last hype cycle, it was regular people FOMOing in, and now we have some investment guys, like we have the book Why Buy Bitcoin, which is really written for an investment type audience and for professional investors with professional investment portfolios that take a very good and close look at Bitcoin. And we also just have the fact that, as many people like to say, it's the best performing asset of the last decade. And if you're a professional investor and your job is to make your clients money, then the time to ignore Bitcoin is past. And I think the moving average and the fact that it's as high as it ever was is just an indicator that we're about to hit the next phase. And that's of course exciting, but I couldn't care less about the actual dollar price. Like I care way more about, the fact that blocks are coming in. That's all that counts.
Yeah, like we said just before getting onto this, is that the price going down is what makes us panic buy.
Exactly.
One Bitcoin equals one Bitcoin. That's his freaking price right there. I'll tell you. Well, I didn't get your take on. We're talking about different phases of Bitcoin. We just had the halving. We'll have the 2024 halving pretty soon, I think. What do you guys have any post halving wrap up thoughts?
Yeah, I can jump in there. Like, I think the halving was awesome this time. Like, it really felt like New Year's Eve. And the great thing about it is that it even improves on New Year's Eve because it's happening at the same time for everyone. Like, we have no time zones in Bitcoin. So
that's a great point. I never thought about that.
It was a really awesome upgraded New Year's Eve, and I love how everyone was, like running around in VR and on live streams and like, yeah, happy halving to you, yeah, happy halving, and everyone was waiting for the last blocks to come in, and it was really cool. And it's also kind of unpredictable, because of the probabilistic nature. You can't really do a countdown or anything; it just happens, and then you're in this next epoch. And I also loved how people were like listing their accomplishments of the last epoch and what they did and what happened in their lives, and laid out a plan for the next epoch. Like, I want to achieve this and that and that, and I really love it how this is shaping up, because 4 years ago it was kind of a non-event. There were some smaller parties and some very, like some news articles and stuff like that. And now it felt like it was a worldwide event, even in the news, like discussed on CNBC, and people were talking about the halving and how it is the opposite of quantitative easing, and Bitcoin is doing its quantitative hardening. And I really like it. Like, it's so great to see. And also, I just want to remind everyone what we're doing here is serious business. Like, all the meme craft and everything we do on Twitter, it will end up on CNBC like 2 weeks down the road. So choose your memes wisely.
Measure your time in halvings. Pound that like button. All right, Guy, what are your thoughts?
No, beautiful. Everything that Gigi just said. It's so cool to me Well, just one to have so many people now to share my enthusiasm with on this. But I never even thought about the fact that it's something that's New Year's is because that was immediately the liking to it. It's like, oh my God, everybody get ready for the block countdown. Everybody got on a live stream and we all had shots ready to take when the block came in, and also, like, amazingly, we had like a bunch of people in the group watching their own node as opposed to watching some block explorer or Bitcoin Magazine's broadcast with the blocks up there. But it's just really cool to see it become like this cultural thing, and that's one of the beautiful things about Bitcoin is that it is a culture. Like things gravitate around it. And it's so cool to see this evolve from, the couple of people in the last halving who are like, oh, it's cool. And, I kind of did my own thing at home and I posted a tweet about it, and now it's like these huge VR parties. We had like 40 people in Zoom, all just from the crew and like the Raleigh Bitcoin meetup, all in watching the halving. And how epic is the next one going to be? Like we're gonna have to pump up our game, man. And the number of participants and the scope of the market and the network is going to be, if it's not orders of magnitude, then I find that a silly thing. Like
the real flippening, flippening will be when the Bitcoin halving is a bigger event than New Year's Eve. I'm gonna tell you that.
Hell yeah.
I got to say, I like how you pointed out that I never really thought about that. That it's the same time zone everywhere. I mean, it New Year's Eve, there's 24 different or whatever it is, different New Year's Eves, and having is everyone's celebrating it at the same time, as opposed to in Los Angeles they celebrate New Year's Eve at one time, New York at the other time. But all right, let's get to our wrap up part. This is the end of the show. You guys can talk about things that were left off, anything you want to promote. We'll start with Guy Swan.
So the show is no longer the Crypto Economy. I'm going to make it part of the Crypto Economy Network because we've got a lot of things coming, and we're pulling in the Raleigh Bitcoin show and trying to make a joint feed. And there's a whole lot of other stuff I want to do to expand this thing and add new educational materials, new shows, that sort of thing. So there's a lot of stuff happening there, but the show has officially moved to Bitcoin Audible, which I love. And I've been so many people have like referred to it as the Audible of Bitcoin. And I've been doing that myself for months and months and months. It's always been a Bitcoin centered show. And I'm really happy to have finally made that next step and putting the library together online to really make these dear family, dear friends, Gigi's recent article. Read it on the show. We got it available in audio. So if you wanted to listen, you can go to the Bitcoin Audible podcast and scroll down. I don't know which number it is. I do them daily. So, but yeah.
Speaking about podcast, do you think it's? I think it's a real positive development that Joe Rogan has gone to Spotify. Do you think it'll boost the interest in Bitcoin podcasts? Get some people drop in the YouTube habit and maybe into the podcast land?
I think it's more of a responsive thing. Like it's sort of a proof of concept or a proof of the value and growth of podcasting. That Spotify, that there are huge investors and huge companies and very serious actors realizing what the potential here is, and that we want to buy land while it's cheap. Similar buying Bitcoin now is that like, holy crap, like I need to be prepared for a couple of years down the road when this is really a game changer. And I think that's just kind of a further declaration of the value of this thing. And it's the biggest show in podcasting. Like Joe Rogan has the show. So I don't see how it's a bad thing. Like I have Spotify for music and stuff, and I usually only listen to Joe Rogan on like specifically the episodes that I'm interested in. Like I've listened to one ad every 8 or something like that. But yeah, I'm happy for him. I hope they paid him a crap ton of money for it, and
Yeah, they did. It was $100 million, I believe, isn't it?
Is that right? I thought that was just like speculation. But if
okay, maybe it's a lot. Whatever it is,
I'm sure it's a monumental amount of money. But
Okay,
yeah, I'm totally fine with that. Yeah, and more power to him. I'm glad.
All right, podcast. We're talking. You never know what you're going to get on this show. All right, we'll end it with Gigi. What are your final thoughts? Anything we left out? Anything you want to talk about?
Yeah, I have some final thoughts actually on the Joe Rogan moving to Spotify thing. I'm not sure if it's good or bad, because one of the great things about podcasts is that they are actually decentralized. Like, it's great that you have an RSS feed for every podcast pretty much, and you can listen to it on whatever device using whatever software you would like. It's an open system, and Spotify just isn't. So I will probably boycott Joe Rogan, and if I listen to it, it will be on a pirated RSS feed. So I think every move to a closed system is kind of a bad one, but of course, good for him. He obviously made a lot of money with this decision, but we will see. We will see how all of this plays out. It's good in that sense that maybe YouTube rethinks some things and some other platforms rethink some things, because obviously some parts of the internet are kind of broken, and it would be just in the interest of humanity to fix those parts. And yeah, those are my thoughts.
I'll say, like, because I highly identify with that, like, concept of like RSS feed, like just the open nature of podcasts. But I think just kind of from a general like market perspective, I think it was inevitable that it ends up being a shared thing, in the same way that like we can't really avoid Bitcoin having custodians, or third parties or banks or whatever. Like, if this thing is actually to be the value that it's going to be, is that we're going to see centralized services, and there are going to be people who don't hold their own keys, like that sort of stuff. And in that same way, it's like, while there are open blogs and all of that stuff, there are pay for blogs. There is content behind paywalls and subscriptions. And I don't think it's an indication that we're going to lose the openness of podcasts. Like, I still personally would never do that. So I don't know.
I think it's just what becomes the norm, like Bitcoin will always be an open system. It will, and also RSS feeds will always be an open system. And whether you're doing news feeds with it or podcasts, it doesn't really matter. And it's fine if you have custodians for Bitcoin, and it's fine that you have centralized platforms. I'm perfectly fine with that. What I'm not fine with is, for example, the current norm that if you're if you're a comedian or something and your content isn't on Facebook, I'm just pulling that out of my ass. But just one example, if you're not on certain closed platforms, you just don't exist anymore. And I think it's a very dangerous trajectory. And the same is true also for search, of course. Like, if you're not found on Google, then your website basically it doesn't exist. And
that's a good point, because we just ran into this with Audible, right?
Yeah, there you go.
Yeah.
And I think, I personally believe that we can have the best of both worlds. And I actually know that firsthand, because my book, 21 Lessons, so final shout out of the show. It's available on Audible. You can buy it on Amazon. You can buy it for Kindle, and you can also read it for free online, and you can also listen to it for free online. But many people choose to pay for it. I'm not sure if it's just to support me or support the cause or out of convenience. I would guess that most people just do it out of convenience, because they just don't know that the book is available online, and they don't know that you can listen to guys' podcasts and just get the same thing pretty much. Some people just, they type in Bitcoin book on Amazon, and they buy the first 3 that pop up, and that's the reality we currently live in. And I just want to point out that we kind of need the open systems, very much so, because otherwise the internet wouldn't be what it is, and we wouldn't even have podcasts, and all the beautiful things come from open systems, basically. And we should not forget that, and be very cautious if we move to closed systems.
Yeah.
All right. On that note, dudes, best freaking guest in the space. Everybody pound that like button, bang that bell. You get This Week in Bitcoin show every Friday. We'll be back next Friday, and you get a new show here every day. I've got that conviction, baby. All right, I'm Adam Meister, the Bitcoin Meister, Disrupt Meister. Thank you very much, guest. Shabbat Shalom. And tomorrow night, we'll be back on the air with the Beyond Bitcoin show. And so thanks, everyone. Have a great Friday. See you tomorrow.